Hey, good morning, everybody. Today is Friday, September 4th, 2015. My name is Cliff Backus, and this is your push-button StockTrading.com video market review. Yesterday was a weak day for the markets as they opened higher and then sold off over the course of the day, closing near their lows for the session. Trading volume was light, as we might expect before a holiday weekend. The market remains volatile, and I would expect that volatility to continue for the foreseeable future. I continue to look for a retest of the recent lows, although that expectation would quickly change with a follow-through day. A follow-through day is a day at least 4 trading sessions from the market bottom, which in this case was August 24th, in which one of the major averages increases 1.25% on heavier trading volume than the prior day. Bulls should be cautious. There's no reason for anyone except the most aggressive bulls to be buying until we see a follow-through day. In spite of the weak close yesterday, advancing issues bettered decliners by nearly 2 to 1. That noted, the New York Stock Exchange advanced decline line remains bearish. New lows bettered new highs, but not really by an excessive margin. Our market timing model is on a primary sell signal, but our secondary signal remains aggressive buy. Most traders should continue to maintain stops at their tightest levels, continue to accumulate cash, and perhaps hedge their portfolios with contra ETFs. However, our most aggressive traders can begin to selectively buy, keeping in mind that our primary signal is a sell, and buying here can be hazardous to your wealth. The O'Neill market timing model is indicating a market in correction. As noted earlier, the low for the correction was on Monday, August 24th, which means that yesterday was day 8 of the attempted rally. If we don't undercut that August 24th low, we could see a follow-through at any day now. That being the case, it's important to keep our watch lists up to date. Small capitalization stocks outperformed large again yesterday and continue to outperform on a 10-day moving average basis. Small caps typically outperform in bull markets. Our swing timing model is indicating an oversold condition in the market. Remember, oversold markets can become more oversold. In this squirrely market, we should continue to err on the side of caution. Again, we're on a primary sell signal, while our secondary signal is aggressive buy. This market's going to continue to be volatile and prone to whipsaw for a while. An aggressive buy signal means only the most aggressive traders should venture back on the long side. Our underlying market signal is still a sell for conservative traders. Be careful. Just a quick note. Monday is Labor Day and the markets are closed. I won't be doing a video market review this weekend, but do expect to have one out on Tuesday morning. See you then. Okay. What we're looking at here is Moody's list of 177 industry groups sorted in HGSI, high growth stock investors, by 5-day percentage price change. The reason we do this is that by noting where the strength in the market is on a daily basis, we can get an idea of where the power in the market is rotating to. The basic premise of momentum investing, which is what we're doing here, is that we need to identify where the power is and get out in front of it. So let's see where the strength in the market has been this week. In the past week, we've seen consumer products up 16.8%, industrial maintenance services up 12.9%, mining services up 6.2%, other wholesale up 5.5%, and rounding out the top 5 sporting goods at 5%. Again, we're seeing a retail theme in the top 5 industry groups. Let's take a look at the NASDAQ composite. The NASDAQ yesterday, after having been up most of the day, closed down 16.48 points or 0.35%. NASDAQ closed at 4733. I want to note this little mini downtrend and this little mini uptrend. The NASDAQ doesn't know which direction it wants to go, but I would expect that we break out of this triangle formation one way or the other. And Typically, once we break out of that triangle, it'll indicate to us which direction this market wants to go. Trading volume yesterday was below the prior day and was below average. For you followers of William O'Neill, we are in a market in correction and have been since August 21st. Market right now is bracketed by support down here in the 42.92 area and resistance up here in the 48.88 range. We are on a sell signal as our primary signal, but for aggressive traders, we are on an aggressive buy signal. Aggressive traders can selectively buy in this market, keeping in mind that we are on a sell signal, and buying on a sell signal can be hazardous to your wealth. Let's take a look at what the S&P 500 was up to. The S&P yesterday closed up 2.27 points, or 0.12%. We closed at 1951. Note how the S&P closed at the bottom of its daily trading range. The market opened higher and closed weaker, which is not the type of activity that the bulls want to see in this market. The S&P is also setting up this pennant formation or triangle formation, and will break out one direction or the other. We'll keep an eye on that and use that as an indication of which direction the market wants to go in the immediate future. Yesterday, trading volume was below the prior day, was right about average daily. We are on a market in correction on the O'Neill system, have been since August 21st. Right now, the S&P 500 is bracketed by support down here in the 1867 area and resistance up here in the 2044 range. Our primary signal on the S&P is a sell signal, although we are on an aggressive buy signal, indicating that aggressive traders can buy here, but they need to be careful. I want to take a quick look at a few stocks here. Actually, I'm going to go through quite a few stocks, and we're going to kind of go through them on a down and dirty basis. First stock I want to take a look at is Inogen. Inogen manufactures portable oxygen concentrators for patients suffering from chronic respiratory conditions. The stock has been in this third stage base on base formation with a pivot point of 51.86. Inogen gets an 80% checklist rating. That's a very high rating. And notice how the stock, let me take off these markups. Notice how the stock has re-challenged the upper end of its trading range. Inogen can be looked at by the most aggressive of traders right here, keeping in mind that the market's on a sell signal and that we want to be very, very careful about buying at this point in the market. Next few stocks I want to take a look at are in the home building industry. Home building industry has really been kind of coming on here and is where I'm going to begin to look for opportunities when we get the follow through in this market. The first stock I want to take a look at is LG Homes, which builds entry-level single-family homes in high-growth markets in Texas, Arizona, Florida, and Georgia. The stock has been trending higher. It's been respecting its 50-day moving average, and yesterday actually broke out of this little consolidation area. We could call this a square base, I suppose. Note how we've had some really significant accumulation in this stock. On days when the stock goes higher, it trades a lot heavier volume than on days when it goes lower. LGI is a stock that we're going to keep an eye on if the market confirms the current uptrend. Just a note, LGI only trades 283,000 shares on an average daily basis. We generally like to see a little bit higher average daily trading volume than that. Next stock, D.R. Horton builds single-family detached homes for first-time and move-up home buyers in 27 states and 79 U.S. metropolitan markets. Stock trades an average daily volume of 5,550,000 shares. It gets a 72% checklist rating. Note how the stock is has a little bit more sloppy pattern than LGI did. Horton also has this really nice accumulation in the stock over the past couple of months, and is also another good place to be looking in the event that the market confirms the uptrend. We've talked quite a bit about WCI recently. WCI develops luxury single and multifamily homes in most of coastal Florida's largest markets. WCI put in this cup and handle base. It broke out right here in the middle of August and then fell back into the base in this area right here. Note how yesterday we broke out of that cup and handle again on fairly heavy trading volume. We're seeing the same type of accumulation. It doesn't look as dramatic here as it does in the last two charts, but we're seeing the same type of accumulation in WCI as we've seen in LGI and Horton. WCI can be considered by very aggressive traders here, keeping in mind we're on a sell signal. It also will be a good place to look in the event that the market breaks out. WCI also trades only 280,000 shares on an average daily basis. That's a fairly thinly traded stock, and so again, it should be considered by only the most aggressive investors. Century Communities builds single-family detached and attached homes in major metropolitan markets in Colorado, Texas, Georgia, and Nevada. The stock's been building this first stage base. It broke out of the base, fell back into it, broke out, fell back in. The stock's been kind of all over the place and has a little bit of a sloppy price structure here, but has had good accumulation, just like all the rest of the home building stocks. We look to buy Century above the $22 pivot point. It's in a first stage base, which is encouraging. Gets a 72% checklist rating and can be considered by aggressive traders. I'd like to see the pricing pattern tighten up a little bit so that it looks more like this. Another consideration with Century Communities is that it only trades 113,000 shares on an average daily basis, and so it's going to be very volatile. And the last of our home builder stocks is Lennar Corp. Lennar builds single-family attached and detached homes in 18 states and develops and sells residential land. The stock trades 2.8 million shares on an average daily basis, so it's a very liquid stock. We haven't seen the type of accumulation in Lennar that we've seen in the rest of the stocks that we've been talking about, although we have seen some significant accumulation. Lennar also is in a fairly sloppy basing pattern here. Hasn't really respected its 50-day moving average very well, but it is in the home building industry and it does get a 72% checklist rating. And so it's worth keeping an eye on for aggressive traders if the market confirms an uptrend. Those are all the home builders that I wanted to take a look at. Now I'd like to take a quick look at two stocks in the building construction products miscellaneous category. These are the companies that will support the home builders. First construction products company I want to take a look at is Builders FirstSource. Builders First is working on this second stage base on base formation with a pivot point of $15.47. Builder's Choice gets a 68% checklist rating, and notice how through the weakness in the market that we've seen over the past month or so, Builders FirstSource has traded in this nice tight basing formation. Builders FirstSource is going to be a real good place to look when this market confirms the uptrend. Aggressive traders may want to consider it here, keeping in mind that we're on a sell signal in the market and buying at this point could be hazardous to your wealth. And the last stock I want to take a look at, Acuity Brands, is a holding company engaged in the production of lighting products and for the industrial, commercial, and residential markets. The stock has been respecting the 50-day moving average. We did have a little bit of a hiccup right here. We broke below the 50-day, but the stock has recaptured its 50-day moving average here. We've seen some fairly good accumulation out of the stock right in this area. although we do have this one spike in selling volume. I believe that was Monday the 24th, the day that the market put in its bottom. Right now, Acuity is attempting to recapture its 50-day moving average. Acuity gets a 64% checklist rating and is currently working on a second stage base. Acuity can be considered by aggressive traders here and would be a real good place to look when the market confirms the uptrend. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. For daily access to our model portfolios, trade updates, and more up-to-date information on our trading strategies, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.